Now, the first question I have for you is that I get so much information, so many stories about the Zimbabwean economy. You get the idea from the finance minister, Ngube, that it's rebuilding, it's turning around, new currencies on the way. I hear other stories that the economy is crumbling. Which way can you see it heading through the markets?
I think, you should have sort of a balanced view as to what has been happening on the ground. I think from the policy side, we've seen, of course, the TSP, Transitional Stabilization Program, being put in place, which has boosted government revenues in terms of, the fiscal side of things. So you do note that in terms of government collections and revenues, they've actually been going up. Because one, there's been the 2% intermediary money transfer tax, but also there's also a duty on fuel. So from a government perspective, in terms of the national treasury, I think they're actually recording some good gains in terms of collection. But in terms of how things have played out, especially to the general populace, we find that disposable incomes have actually come down, because what is happening really is tax is actually increased through 2% tax. We've seen fuel prices going up, and also inflationary pressures. So in terms of consumer demand on the ground, it's not that exciting. So really, there are a lot of strains, especially when you're looking at just the level of disposable income.
I'll say, and you're saying inflation, something like 76, nearly 77%. I mean, surely, again, that's very disruptive for the economy and the functioning of the markets.
Yes, I mean, that has been a major issue. But what has also happened is that, since October, we've seen a lot of, policy changes. One, of course, was the separation of RTGS and Nostro accounts. So basically, there's been a loss of confidence in the local RTGS dollar. So you find that even on the parallel market, we're now looking at rates of 1 USD to about 10 RTGS. I mean, this was at 1:1, some months back. So really, the inflation number really is being pushed by the exchange rate. Because you'd find that in Zimbabwe, in terms of production capacity, we're not quite there. So we import a lot of goods, especially out of South Africa and the like. So when you're looking at items such as food, the pricing really is being benchmarked against a parallel market exchange rate that's quite significant. So the net result, of course, is an increase in price levels. And currently, I think the pricing environment is not that stable, and we're seeing prices going up on a daily basis. I think, of course, economists such as Steve Hank actually putting the inflation figure at more than 200%, which is sort of close to what we're seeing on the ground, really.
But despite what the finance minister has been telling us here at CNBC Africa, he said the economy is turning around. He says a new currency is just around the corner, maybe 6 months' time. But what you're telling me kind of militates against this idea.
Okay, so in currency market, I think the key thing is confidence. Quite clearly, what we're seeing on the ground is that, especially looking at Zim, there's no confidence in the system. There's no confidence also even in the RTGS dollar. So basically, it will be too early or premature for us to talk about a new currency probably 6 months from now. There's need to really see how some of these policies would actually play out, and also boost productivity. I think that's what's key. Zimbabwe, we do have the capacity to actually produce. We have the resources, but in terms of actual production and also the need for capital, it needs to be addressed. So really, it will be early days. It will be premature for the government really to.
But what are you hearing from foreign investors that you deal with on a daily basis? I mean, are they ready to invest in stocks on the Zimbabwe Stock Exchange? Are they ready to pour money into infrastructure and some of the sectors like mining and agriculture, which have survived.
Okay, so if you're looking at the portfolio investors on the ZSE, because of a lack of confidence in the system, we find them looking for ways to exit the market because of the currency regime. It's been very difficult for them to actually move money out of Zimbabwe because of shortages of forex. So what they've been doing is they've been making use of fungible stocks, for example, the Old Mutual share, which is also listed on JSE. So we've seen a lot of action around, Old Mutual, a lot of demand from foreign investors looking at ways to exit the market. But also on the foreign direct investment side of things, of course, the current administration is sort of pushed in terms of marketing campaigns. Zimbabwe is open for business and the like. So they've made changes also to the indigenization policy. The 51% has actually been taken away in most sectors. So really, they're trying to attract FDI investors to come in, and we've seen a number of deals that have been signed, especially on the mining side. Of course, platinum and chrome. There's also coal as well. So we've seen that happening in terms of deals being signed, but on the ground we haven't seen much in terms of work being done or money being put on the table. So we're actually waiting to see how this new administration will do in terms of just stimulating confidence and attracting FDI investors.
Thank you very much. That was Batanai Matsika, the head of research at Morgan & Co.